This discussion is on internal controls, specifically cash receipts received in the mail. And of course, when I say cash receipts, I am generally referring to checks, as it is rare that actual cash is delivered in the mail. But it could also relate in limited rare instances to cash received in the mail. The key control over cash receipts received in the mail is a cash receipts log or list. The cash receipts log will be actually prepared by the mail opener. We will then discuss how 3 other individuals use the cash receipts log for the internal control and create our separation of duties and controls and checks and balances over each other. As I previously stated, the mail opener will actually prepare the cash receipts log. Then they would take their actual cash receipts, checks, and cash to the bank depositor. The bank depositor will then reconcile the amount that is on the mail opener's cash receipts log with the amount of cash receipts the mail opener has brought to them to be deposited in the bank. Both individuals would probably initial the cash receipts log. Then the cash receipts log is given to the accounts receivable clerk. The accounts receivable clerk would then update the accounts receivable subsidiary ledger for those credit customers who have submitted payments on their accounts. Again, the accounts receivable clerk should not have any access to the physical cash. Therefore, the accounts receivable clerk cannot be the same person that is the mail opener or the bank depositor. Finally, the bank reconciliation clerk in the accounting department would also use the cash receipts log to verify that the amount of money that was deposited by the bank depositor agrees to the amount on the cash receipts log or list. Again, to specify our separation of duties related to this area, the mail opener and the bank depositor need to be 2 separate individuals. And the mail opener and bank depositor also have to be separate from the accounts receivable clerk that updated the accounts receivable subsidiary ledger. And finally, the bank depositor cannot also perform any functions related to the bank reconciliation, as these are individual steps in the accounting system that are checks and balances against each other. Finally, on our regular and independent reviews, again, the bank reconciliation is a review over the cash receipts received in the mail, and the bank reconciliation clerk is verifying that the amount that the bank depositor was supposed to deposit, which agrees to the cash receipts log or list, was actually deposited in the bank. Also, the accounting department should have an accounts receivable write-offs report, which lists any accounts receivables that were written off, and to verify that those were actual accounts receivable that should have been written off because of uncollectability as compared to fraud or misappropriation of funds relating to cash receipts received in the mail.